Hey, in this video, we're going to talk about, is it still possible for a soft house price landing? Well, there's a reason why we want to discuss that, so make sure you keep watching. And while you're here, could you do me two favors? My name's James Nicholson. We make YouTube content every single day about property investing and the property market. So while you're here, make sure you don't lose this channel by subscribing and hitting the bell notification. And if you're already subscribed, then make sure you smash that like button over there, guys. Smash the like button because that really helps me with the YouTube algorithm. So it'll take 2 seconds. Do that now. So, house prices. Now, it makes sense that house prices would absolutely crash in this current market. It just logically makes sense with all the stuff that's been going on. We've had the cost of living crisis. We've got inflation at record highs. We've got interest rates that have gone up 13 times in a row, from basically 0 to 5% as a base rate. Not only that, interest rates are expected to rise again. So why is there a possibility of a soft landing, and who's even saying that this is a possibility? Well, Nationwide came out with their data this week, and the data is actually a lot more positive than you might think. So house prices in June went up 0.1%. And with everything that's happened, why has it not gone down 2%, 3%, 4% in a month? And that's because the economy is still really strong. Now, a lot of people at the moment have been stress tested on mortgages above 6%. So we're not above that level yet. And employment is still doing really well. And people just aren't moving. Now, the government helped the banks to come out with a new scam, whatever you want to call it. But you are now in a position where you can get interest-only payments on your mortgage. Now, for some people, depending on how far through their mortgage they are, that could mean your payments could save hundreds of pounds every single month. Now, that will negate the interest rate rises that a lot of people are going to potentially suffer. Now, what's also interesting is a lot of people are still in fixed rate mortgages. About 1 million people are going to come off that in the next year, but there's still a lot of people that are fixed at the lower rates. And so if you're fixed at the lower rate, let's just say you fixed at a rate of 1.5%, which some people have, you're not going to sell your property because the mortgage that you'd end up with would be plus 6%. So people are just going to wait out what's happening in the market and just see whether interest rates start to come down, or maybe they create more equity in that time by paying down some of their mortgage. They're just not incentivized to move at the moment. And so the difference between now and 2008 is, in 2008, a lot of us were on variable rate mortgages because rates didn't move as fast as they have done recently. And so that meant that when they did rise in that period, it caused a lot more damage. So for some of you watching this right now, you look at the interest rate rises and you think, wow, that's not great. I don't want that to impact me. But today you've got a 5-year fix. So actually you're all right for the next 2 or 3 years, or 4 years maybe. And so that means that your payments aren't actually going up. It doesn't matter what the Daily Mail says. It doesn't matter what other YouTubers say. If your payments are good, they're fixed at a low rate, you're going to sit there. And so transaction volume will go down massively. Now, Nationwide have said there's still a chance that we will have what we call a soft landing. And a soft landing means that we will have less than a 10% drop in house prices on an annualized basis. Now, that's interesting because there's a lot going on. If you read any newspaper, it's saying 30% crash, 40% crash. And that's very interesting to see that sort of language. And why I listen to the lenders over a newspaper or an economist, for example, is that a lender has to really update shareholders. So it would be irresponsible for a lender to say, look, we're going to have a very good positive year this year and house prices are going to go up, and then they crash 30%. That means they're not getting the right message out to their stockholders and shareholders. And so they're going to cause a lot of problems if they do that. But it's interesting to note that they're saying soft landing because data they have that no one else has is they know what's going on today. So they know who borrowed money today, who got a mortgage offer in principle. They control the valuers, or a huge, vast pools of valuers, and they're sending the valuers out doing valuations at the moment. So they know what they're going to be offering in the future. And if Nationwide is saying, look, we don't see a crash happening this year, then we need to take note on that. Now, they could be wrong, because there's other data sources as well we've got to look at. So Nationwide is one lender, although be it a very big lender, because they've got lots of sub-brands underneath that brand as well. You've got to look at what Halifax say in a week or so. And maybe there's lots of cash transactions happening right now that we don't know about. But it is interesting to see that this year, house prices have been pretty much flat. We've had 0.1% up, we've had 0.1% down. We are on an annual basis 3.5% down, right? Just to be clear. And that is all pretty much happened at the back end of 2022, October, November, December 2022, when we had the mini budget. There were transactions that went through quickly then. Good deals were there to be had, because at that point we thought the interest rates were going to go up to 6.5% as a base rate, pretty much straight away. The pound collapsed, everything was carnage, mortgages were pulled, so a lot of cash transactions happened, and that did spook and hit the market on a temporary basis. But where do you think is going to happen? What do you think is going to happen? I know the comments are pretty much becoming 50-50 from you guys now. Some of you are saying that the market is already crashed and we just don't know. And if you're talking about inflation there, then you're right. Okay, so the value of your property has been eroded by inflation 10% this year. And so that technically is a crash, but in real cash value, the actual number that your house is worth hasn't really changed so far in 2023. And that's what we're talking about here. But where do you think prices are going to ultimately end up by 2023? December 2023. That's what I'm interested in, and that's what I'm talking about here. So do comment below. Let me know. Do you think they're going to go up, down? What percentage? I'd love to know your thoughts on this. And where do you think interest rates are going to end up as well? It's really interesting to get a civil conversation going on this sort of topic. None of us know for sure. Economists don't know for sure. Lenders don't know for sure. A lot of it is out of our hands. A lot of it is going to be down to where inflation ends up in the next few months, because that's going to trigger where the interest rates go. If inflation sticks at 8% for the next 3 months, interest rates are probably going to get to 8%, and that will be an absolute disaster for a lot of us. So we've got to hope that the inflation is finally getting dealt with. It didn't this month, but let's see what happens. But I'd love to know your thoughts and comments, so do that below. Do like the video, do subscribe to the channel, and if you want to learn about property investing for £1, come and join us in the Property Accelerator. You can click on the link below and we will get you enrolled, and you can get mentored by me for 7 days for £1. And then if you want to carry on, that's up to you as well. Go and check out all the other content on my channel, including this video right here.